Let's bring Grace Peters into the conversation, Head of Investment Strategy for EMEA at JP Morgan Private Bank. Grace, good morning to you. Can I just start off with this inflation vs interest rate hikes discussion? It does seem that we've had now back-to-back rises in the Dow, and increasingly the market is embracing the idea of peak inflation. Is this wishful thinking and perhaps premature, or do you think the market's onto something?
No, I think the data that we got for the March core inflation does give us a degree of confidence that inflation is in the process of peaking. We saw core inflation rise only 30 basis points on month. That was below analyst expectations. And when you look below the surface of that, you're starting to see some transfer from goods to service-based inflation. And we think that is, the future direction of travel. Now, I think inflation is going to take some time to peak. We do think it'll peak during the second quarter, but it's probably going to take us through the third quarter to really build confidence that you are seeing inflation coming down and that it will start to fall more materially through the end of this year and into 2023. So I think when it comes to feeding that through into the rate piece of it, when we come to the May and the June FOMC meetings, we're not yet going to have that data to really categorically say that inflation is in the process of peaking and will materially fall, over that period of time. And therefore, I think when it comes to, what the Fed is going to do at those meetings, it's still absolutely right for them to lean into tightening, for them to go for the 50 basis points at each of those meetings that the market is priced in, and then to stand back and re-emphasize data dependency. But certainly from a risk perspective, the concept of inflation peaking and therefore yields starting to peak out in due course as well will offer some comfort for investors.